Hey everyone, welcome to another weekly review. So this week we had a bit of a rotation sequence. This is what the performance map looked like for last week. And we see a lot of green all over the place except in tech and mega caps. Nvidia was the exception. Overall, it was a negative week, the first in quite a bit of time. And even though SPY was negative, you can see here that most of the stocks on this map were green. This is what rotation looks like. And basically the map the market has two scenarios moving forward. One is mega caps and semis continue outperforming, which is actually the negative outcome. And the other one is rotation keeps happening. We get another like 5-10% down on each of the mega caps, some more, some less. And we continue seeing green all over the rest of the market. This should give us still a relatively small pullback, and then we start a broad rally across the board that can take us to 5400. If mega caps continue performing and Nvidia continues performing in semis, then we're looking at a topic formation in which the rest of the market keeps going down. We go up again, and most likely on March OPEX we start an even larger correction. But this being said, let's look at a couple of stuff. One is this is XLY over XLP. Actually, let's do XLY over SPY. So XLI is consumer what was consumer discretionary, and consumer discretionary means stuff that people likes to buy but they don't need to buy it, like luxury goods, cars, uh, stuff like that. And as you can see, we are at a major pivot, visible with the naked eye. I'll do weekly. And XLI relative to SPY has underperformed massively, meaning in spite of the economy quote unquote booming, allegedly, we are not seeing people spending on stuff that they usually spend when times are good. We are very far off from the market top that we had in 2021, and this is a clear bear market. Right now we're at a pivot. I'll draw it as an area because it's more honest. Let's say something like this. So we are in this pivot area. We don't know if we're going lower or we're going higher. Technically speaking, we made a lower high, uh, sorry, a higher low, and in theory this should be going up. This would be a sign that we're actually having a broad bull market. On the other hand, we have XLP over SPY, which is consumer staples over SPY, and this is a clear bear market, but and we're nearly at the lows from the 2020 2000 bubble. Consumer staples are stuff that you buy always, like food. For example, Walmart, Costco, they're in XLP, and these things do well no matter the environment. And this ratio is at a very low point, but showing signs of a reversal, meaning we have a short-term bearish divergence here. This one, the slope on this trend line is much steeper than the slope on this trend line. So it's looking like it's very close to a reversal. And again, this is a sign of a not so healthy bull market. But this one is more so than that. Oh, the other one. Didn't I what? XLP, no, XLY over SPY. This one more than not. So this is saying we are in a bear market. This is saying we're in a bull market because people are not spending money on or the stock the companies that people usually spend money on during an economic boom are not doing well. And this also contains stuff like Amazon, and Tesla. Tesla is doing it's in the gutters, but Amazon is the number one name in XLI. And in spite of Amazon's performance, this looks like a shit graph. So we are now at the pivot, or of do we double down? Does the market double down on being narrow, or does it reverse and starts going broad again? The path of the market staying narrow is one that will lead to a major correction relatively soon. The path where the market starts going broad is the one where we get a quote unquote true bull market, or a bull phase in which XLI will go up a lot and the supposedly economic boom starts being felt by people. I am in the camp that we get this one. And two more data points. One is the dollar, DXY, is trying to break out. If it succeeds, we get a major correction now. If it doesn't succeed, we get another leg of the bull phase. Given how the Fed and the Treasury reacted to the hot CPI print, in which it was not disregarded, it was downplayed. Uh, they're trying to keep a lid on the dollar, and they're trying to keep a lid on yields. Yields would have to go up quite a lot, maybe not this high, but at least to 4.95 for the 20-year and continue this breakout here. And I don't see that happening. Like, we are relatively close to it and don't think it's possible without some other event causing another scare. And the type of scares that we can get now, like bank scares, will actually push yields down, not up, and they will push dollar down, not up. This in anticipation of Fed cuts, meaning the dollar is weaker, lower yields, and relatively speaking, the dollar should be weaker. Even though, based on economic performance, the dollar probably should be right up here now. Okay, this being said, let's go back to SPY and see where we are at. I think we go and retest the lows, the minimum. Most likely the lows will be taken out because it has to trap some bears if it will reverse. This should happen on Tuesday and Wednesday. Most likely on Monday the market is closed, and I would like to see it happen this way. It doesn't mean it has to, but I think it has to happen before Nvidia earnings. So my expectation is that it will drop before Nvidia earnings. On Wednesday, we should be staying flat in anticipation. Nvidia flow for calls was quite bullish for May, for July. So Nvidia is not like SMCI and only has short-term flow. Nvidia actually has long-term bullish flows. So we go down here, we take out the lows to trap some bulls, and then if it reverses and it retakes this level, those bulls will be trapped and it will fuel a squeeze. And we go back to the highs. If Nvidia earnings are, let's say, not so good, I think we can have another leg down. The maximum target I think is 470. Don't think we can go below this, lower than this point. There's another support here at 483. This is another target where we can see a bounce. So this is kind of scenario. So we either go here and bounce, go here and bounce, or go as low as to 470 and bounce. This is the three main scenarios. And after that, it depends on what the market does. Like I said, if it's a broad-based rally, then we go much higher. If it's a narrow rally, then it's just another leg up in the distribution phase before the major correction that will happen at some point. So that would look like probably something like this. No, not that slow. Look like this. Eventually, we will retest in 2024 open. Most likely in March if it's not now. If it is now, uh, it's a long, and that's kind of it. Let's look a bit at mega caps as well. For Tesla, I still think this is the case. Tesla is also part of XLI because it's cars, and they get one last scare down to make a bearish divergence. potentially go to 178 for retest of the lows, or 165 is if the move down is probably to 484. Apple is a bit complicated because let's put on the moving averages. We have the moving averages, and on the daily, green is 20 MA, blue is 50, purple is 100, and orange is 200. So on Thursday it went below the 200, saved it, but on Friday it got rejected again and closed below it. We are at a major trend line of the current uptrend. I could see it breaking down here given that it closed below the 200 MA and doing a retest of 166. And this is building the range between 196 and 166. Most likely something like this moving forward. It will just move in this range until we have more clarity about what's going on. Nvidia is staying at the 261 Fibonacci level. I posted about this one on Twitter. Don't need big averages. Basically, we have a couple of scenarios. One is if Nvidia does amazing on earnings, and amazing means guidance. Earnings will be probably okay. I doubt Nvidia's ability to impress with guidance once again, but you never know. If they have another blowout earnings, target is 970, 960. What's this? 970 for the 361 Fibonacci level, and this will happen quickly. Like by March OPEX, it will get there. If earnings are meh, it means a pullback. Target is 650, and most likely we will get something like this of a consolidation before another move. That move can later be proven to be higher or proven to be lower. Again, it will depend on earnings. We will see how time how this plays out over time. But basically, meh earnings means this in this range, most likely between the current levels and 650. If earnings are a mess, I think we could go as low as 500, retest that 161 Fibonacci level, and that's kind of it. Uh, if we get, I don't know, average earnings, meets expectation, sideways, and then based on other results, we may go for this move, or we maybe go for this move. Google, not a lot to say here. It was the weakest on Friday, or for the week, right? -5 for the week. So I think it can continue lower. My target would be this area here between 123 and 126. Amazon, I expect Amazon to be the strongest. Amazon, Meta, and Microsoft. Uh, Probably the order being Meta, Amazon, and Microsoft to be the strongest. But I think it's plausible that Amazon sees a pullback to 160 to fill the gap here. This is clearly a buy. I think Amazon later this year tests the all-time high at 187. Potentially then goes higher. This is a cup and handle in the making, or at least a cup for now. We have this here, then does a pullback, and then to go higher, may reject or may actually do the breakout. Uh, but I think the pullback to the gap fill from earnings is a buy for Amazon. Microsoft is looking quite strong. I think it does a shallow pullback. This area here between 375 and 365 basically, and then again goes higher. I don't expect Microsoft to go significantly higher. I expect it to follow this trend line here. We'll see how it plays out. Meta, I think, is the strongest name because election year, lots of ad spending on Facebook for the election. We're just starting that cycle now, so I think it will be the strongest name out there for Meta. And I don't think it even goes to try to fill the gap. Most likely, it just consolidates here in this area this can be quite a while, don't know. It could end next week or it could take another 2 or 3 weeks of consolidation before it moves higher. Netflix I don't really like. I see it going for the gap fill to 500 to 585, potentially higher. But I don't really like Netflix. Tom building a bull flag. Don't think it's quite ready to break out yet. Let's enjoy it. I do see it consolidating here for longer. Oil is like the dollar is being kept down, probably artificially, but eventually it will make its move. Don't think energy will outperform immediately, even though we are likely to see rotation into energy. But I think it will be like a consolidation, like uh, rotation, and eventually it just makes the move and it just goes quickly and up. Yeah, that's kind of it for this week. I'm not doing the single name video this week because I expect the pullback to happen. So I'll just post on Twitter if I see good buying opportunities. And that's kind of it. Okay, have a good one. Bye bye.